Trading account. Trading account is part of profit and loss account. Usually profit and loss account divided into two parts. The first part is termed as trading account, which is so prepared as to show the amount of profit or loss on account of purchasing the goods and selling them. Such a profit is termed as gross profit and loss as gross loss. Gross profit is the difference between the cost of goods that have been sold and the proceeds of their sales without any deductions in respect of the indirect expenses, distribution and general expense. In the trading account, therefore, it is necessary to include all items of charges directly affecting the cost of goods sold. It is equally necessary to see that every year trading account should be prepared in the same form. It will help the trader in the matters of comparing the profit. Same may be expressed in the form of following equation. Gross profit equals net sales, cost of goods sold. In case of goods sold exceeds the value of net sales, the result is gross loss. When cost of goods sold equals opening stock plus net purchase plus direct expense stock. Now the equation may be expressed in expanded form representing two sides of trading account thus. Opening stock plus net purchase plus direct expenses plus gross profit equals net sales plus closing stock. Trading account important item. Debit side. 1. Opening stock. It is the goods which remain unsold at the end of previous year. It must have brought into books with the help of opening entry. So it always appears inside the trial balance. Generally, it is shown as first item on the debit side of trading account. 2. Purchases. Purchases mean the commodity in which a trader deals. How trader deal X company sale his asset to Y company. Here Y company is a purchaser. Purchase include both cash and credit. Here purchase of good during accounting period. Here account period means 1 year total entries of account. Total purchase are recorded on that debit side means left hand side of trading account. Total purchase are adjusted by deducting the value of good if any, which have been returned to supplier, and only net purchase are recorded on the debit side of trading account. For example, as stated in earlier example, Y is purchaser of good of cost 20,000 rupees. So Y enters entry in his accounting book. In trading account Y mentioned entry left hand side or debit side purchase good 20,000 rupees. If he returned 10,000 rupees goods to X, then in Y mentioned entry on debit side. To purchase goods equals 20,000. Less returned goods equals 10,000. 10,000. 3. Direct expenses. These expenses refer to the expenses incurred or occurred in purchasing the good and manufacturing the goods. These include all expenses which have been occurred before the goods become ready for sale and are shown on the debit side of trading account. The example of direct expenses. Wages, freight, carriage and cartage, clearing charges or port charges, import duty or custom duty, octroi, motive power, manufacturing expenses, consumable stores, packing charges, royalty, excise duty, royalty, packaging. For example, 5,000 wages paid to labor. So in company mentioned entry in trading account on left hand side. 2 wages equals 5,000. Credit side item of trading account means right hand side. Sales. Sales include both cash and credit sales of those goods which were purchased for resale purpose. For example, X Private Limited sales good to Z Private Limited and Z further sales his good to J Limited. Here Z Limited resale his good to J Limited. Both X and Z mentioned entry of sales in their trading accounts credit sides. Another Another example, X Private Limited sales good of 30,000 rupees to Zirk Private Limited. Zirk Private Limited returned goods of 5,000 rupees. Then X Private Limited mentioned in his trading account sales entry on credit side. Buy sales equals 30,000. Less return equals 5,000. 25,000. Closing stock. It represents the value of goods which remain unsold at the end of a trading period. Generally, closing stock does not appear inside the trial balance. In that case, it is shown on the credit side of trading account. But sometimes when it appears inside the trial balance. For example, Zirk Private Limited stock of 100,000 rupees is unsold or not sale. That stock mentioned in their trading account credit side. By closing stock equals 100,000 rupees. Journal entries of trading account. 1. How journal entry of trading account debit side. Trading account. To opening stock account. To purchase account net. To direct expenses account. Being opening stock, purchase and direct expenses transferred to trading account. 2. For item credit side of trading account. Sales account net debit. Closing stock account debit. To trading account. Being sales and closing stock transferred to trading account. 3. For gross profit. Trading account debit. To profit and loss. Being gross profit transferred to profit and loss account. 4. For gross loss. Profit and loss account debit. To trading account. Being trading account format.